Exercise 3-9. This particular exercise deals with closing entries. I copied the information up here at the top, so even if you don't have your book, you have the information. And we are supposed to prepare the closing entries for these accounts. Now, you might notice there's only a few accounts here. This isn't the entire trial balance or adjusted trial balance of a corporation. They only gave us the temporary accounts because temporary accounts are the accounts that need to be closed at the end of the accounting cycle. All right, and they are revenue, expense, and dividend accounts. You close them to income summary, and then income summary to retained earnings. I should say you close revenue and expenses. And then dividends is closed directly to retained earnings. Okay. I'm going to ignore my typos, so y'all just ignore them. All right. Generally, the first closing entry, you do not have to put the numbers. I'm just going to put them here for illustration, is to close revenue accounts to income summary. So you might notice up here, the first revenue account we have listed as sales revenue, and sales revenue has a credit balance. So if we're going to close it and zero it out, we have to debit sales revenue. So your entry is going to be a debit to sales revenue for the $2,200. Then look for more. I have another credit here for gain on sale. That's a type of revenue. It also needs to be closed out. So I'm going to debit gain on sale of land. And then the total, I'm going to credit, make sure you indent a little bit, to income summary. All right, the second entry is to close expenses to income summary. All right, so expense accounts typically have a debit balance, all right? Dividends we're going to close separately to retained earnings, so I'm looking at cost of goods sold and then my expenses. So even though I'm saying expenses right here, I'm including cost of goods sold is an expense. It just doesn't have an expense in the word or in the phrase, but it's going to come in and go in this area. All right, so since they have debit balances, I'm going to have to credit them, and my debit's going to be the income summary. I can't do the total yet because I don't know it. So I'm going to do the expenses. You have to list them all out. So I'm going to have cost of goods sold for $1,350, $130, $120, and $180. Salary expense. Utility expense. Miscellaneous expense, and income tax expense. All right, then I go back to the debit for income summary, and I add up all those expenses. To get my total expenses. Now, remember, remember if you were posting, you're posting all this to the accounts. So if we were to post this to the income summary right now, a little income summary right here. Okay, so the first thing I did was I credited income summary for $2,500, and that represents my revenue. All right, and then I debited for $2,080. That represents my expenses. And if I balance out this income summary account at this point, I'm going to have $2,500 minus $2,080. All right, so I'm going to have $420 left. This $420 here is basically net income. All right, if it ended up being expenses were more than revenue, then it would be a net loss. But if I had all the financial statements, that should tie to net income on the income statement. So now I have to close out my income summary. That's my third entry, sorry. So close income summary to retained earnings. All right, we just saw that our income summary has a credit balance. So if I want to close it out, I need to debit income summary for the $420. And I'm going to credit retained earnings. And now when I post that, when I post the $420 and I balance again, my balance is now zero. Okay, so remember this income summary is only used for the closing process, and that's it. Once you're done with the closing process, it's back to a zero balance. So that's the only time you see it. All right, the last one is to close dividends to retained earnings. Okay, so dividends are up here. They have a debit balance. So if I'm going to close them, I have to credit retained earnings. Credit dividends. My brain's already moving on to the next thing. My hands aren't fast enough. And then I would debit retained earnings. And it makes sense that I'm having to debit retained earnings because dividends decrease retained earnings. And that is it. A little review over the closing entries.